Let me hit you with a number that stopped me cold this week. There are two families living in the same city, same neighborhood. Both households earn between $73,000 and $81,000 a year. Textbook middle class by every definition economists use. One family is Latino, one family is white. Same income bracket, same middle class label. But here is where it gets uncomfortable. The Latino family has a 50% chance of not being able to afford basic necessities: food, housing, childcare, transportation. The white family, just 27%. That is not a typo. That is not a fluke. That is a December 2025 Brookings Institution report, covering 160 metro areas across the entire United States. And today, we're going to break down exactly why that gap exists, because it goes way deeper than just income. It is about wealth, history, access, and a system that was never built with everyone in mind. Stay with me, because this is one of those videos where the deeper you go, the more it all starts to make disturbing sense. First, let's make sure we're all working from the same definition, because middle class is one of the most misused terms in American financial conversation. Economists, including the ones at Brookings and the Tax Policy Center, define the middle class as the middle 60% of income earners. At the national level, that places the middle class income band somewhere between $30,000 and $153,000 per year. But here is the catch. That range gets adjusted depending on where you live, because $80,000 in Youngstown, Ohio is not the same as $80,000 in Los Angeles. When Brookings ran their December 2025 analysis, they adjusted for regional price parity and average family size across 160 US metropolitan areas. They then stacked those income ranges against the Economic Policy Institute's Family Budget Calculator, a tool that prices out the actual cost of housing, food, healthcare, childcare, transportation, and basic household expenses for a given city. Their conclusion: 1/3 of the entire American middle class cannot afford basic necessities where they live. Let that land for a second. 1 in 3 middle-class families in the richest country on earth cannot afford to cover the basics. But here is where it fractures along racial lines. The median middle-class household income for white families sits at $81,000. For Latino families, it is $73,000. That $8,000 difference sounds manageable on paper, until you layer in everything else. And those everything else's are exactly what we need to talk about. Let's go back to that core statistic, because I want you to fully absorb what it means. 50% of Latino middle-class families cannot afford basic necessities. That means you could be a household earning $75,000 a year in a mid-sized American city, calling yourself middle class, and statistically, you have a coin flip chance of not being able to cover your rent, keep your kids fed, and get to work reliably, all at the same time. For white middle-class families, that figure is 27%, still a crisis. Let's be honest about that, but a fundamentally different level of financial precarity. The Brookings report went further. They found that across the 160 metro areas they studied, there is not a single metro area in the country where less than half of white middle-class households struggle to afford basic necessities. Not one. But for Latino middle-class households, 61% of those same metro areas see less than half of Latino families able to make ends meet. 61% of cities, everywhere. So we're not talking about a San Francisco problem or a New York problem. We're talking about a national structural reality. And it is getting worse in specific places. In Los Angeles, the numbers for Latino and Native American families are so stretched that they're basically in freefall compared to their white counterparts in the same zip codes. Now, the obvious question: why? The first layer of this problem is something I'd call the income illusion. Two households can earn similar wages and end up in completely different financial realities, and income alone doesn't explain it. What matters is what is left after you pay for everything life costs. And Latino families, across age groups, across geography, are disproportionately concentrated. in high cost of living environments. According to the 2025 Hispanic Research Center data, 41% of all Hispanic children live in households that are housing cost burdened, meaning they're spending more than 30% of income on housing alone. 20% live in households that are severely housing cost burdened, spending more than 50% of household income on rent or mortgage. To put that in real numbers, a Latino family earning $73,000 a year that is spending 45% of their income on rent in Los Angeles or Miami has, before taxes, roughly $3,300 a month left to cover food, healthcare, transportation, childcare, and everything else for a family of 4. That math simply does not work, and that is before we even talk about building wealth. Meanwhile, white middle-class families tend to have lower housing cost burdens, partly because of geography, partly because of homeownership rates, and partly because of generational wealth advantages that we're going to get into very shortly. This is where the conversation shifts from income to wealth. And this is the part most. Income is what you earn. Wealth is what you own. And in America in 2025, the gap between what white households own versus what Latino households own is staggering, and it doesn't get talked about nearly enough. Here is the data straight from the numbers. According to an April 2026 Axios report, citing the most recent UCLA Latino Policy and Politics Institute and on IDOSIS research, median white household wealth, $284,000. Median Latino household wealth, $62,000. That means Latino households have roughly $0.22 for every $1 of wealth held by white households. 22 cents on the dollar. And this wasn't always the same gap. Back in 1989, it was 7 cents on the dollar. So there has been progress, but the closing of that gap has been agonizingly slow. And recent economic pressures may actually be reversing some of those gains. Now think about what that wealth gap actually means. In practical terms, wealth is your cushion. Wealth is what pays for emergencies. Wealth is what lets you avoid taking on debt every time your car breaks down or your kid ends up in the ER. Wealth is what you draw on when a recession hits and your job disappears for 6 months. When a white middle-class family hits a $5,000 emergency, many of them have savings, a retirement account they can tap, or equity in a home they can borrow against. When many Latino middle-class families hit the same wall, they reach for a credit card, a payday loan, or they call family members who are also stretched thin. That is the wealth gap made real. It is not abstract. It is the reason 2 families earning the same income can have wildly different financial outcomes. Let's get specific, because behind the wealth gap are 3 concrete structural barriers that keep Latino families running in place, even when they're doing everything right. First, homeownership, and who actually builds equity from it. Homeownership is the single biggest driver of household wealth in America. Full stop. It is how most American families, regardless of race, generate the bulk of their net worth. And this is where Latino families are playing catch-up at scale. As of the most recent data, 51% of Latino households own their homes, compared to 73% of white Americans. Report from NAREP found that 441,000 net new Hispanic homeowners were added in 2025, and Hispanic households drove over 139% of total US homeownership growth that year. That is remarkable. The Latino community is fighting hard for homeownership, but here is the nuance that gets lost in those headline numbers. Acquiring a home and building wealth from that home are 2 very different things. A Harvard Joint Center for Housing Studies 2025 report highlighted that older Hispanic homeowners often face a combination of limited retirement income, elevated care needs, and persistent housing debt, meaning many Latino families who own a home are not accumulating. They bought later. They often bought in areas with slower appreciation. They carry more mortgage debt relative to home value. And many bought homes that were cheaper, which sounds like a good thing until you realize cheap homes in underserved neighborhoods don't compound wealth the way homes in high demand white suburban zip codes. Do. Second, retirement savings. The invisible wealth gap. This one is brutal. According to the same April 2026 UCLA Unitas report, only 28% of Latinos have retirement accounts compared to 62% of white Americans. That is not a lifestyle choice. That is a structural outcome. Here is why it happens. The CHCI's 2025 Retirement Pathway Report for Latino workers documented exactly how this plays out. A massive portion of the Latino workforce, especially immigrant workers, documented and undocumented, works in industries that do not offer employer-sponsored 401k plans. Construction, food service, domestic work, landscaping, agricultural labor. These are the industries that keep the American economy running. And they are also the industries that are least likely to come with any retirement benefits whatsoever. Beyond job type, there is an hours and tenure problem. Many employer plans require workers to complete a minimum number of hours or tenure before becoming eligible. Requirements that disproportionately screen out workers in part-time or seasonal employment, which again, Latino workers are more likely to hold. And then there is the banking access issue. Undocumented workers. Approximately 7 to 11 million people currently in the US labor force, the majority of Latin American origin, often cannot access traditional banking infrastructure needed to open retirement accounts. They pay into Social Security with individual taxpayer identification numbers, contributing to a system they may never be able to collect from. They're funding American retirement, but they're not building their own. Third, credit access. The compound disadvantage. The 2025 State of Hispanic Homeownership report from NAREP put it plainly: outdated credit systems, excessive pricing structures, and structural barriers continue to constrain access for Latino and first-time buyers. Here is how credit discrimination compounds the wealth gap. If you can't access affordable mortgage credit, you rent longer. If you rent longer, you build no equity. If you have no equity, you have no collateral. If you have no collateral, you can't get a small business loan at a competitive rate. If you can't get competitive financing, your business costs more to start and run. The cycle is self-reinforcing, and it started long before any individual Latino family made any financial decisions. The UCLA Unitas report traces this directly back to redlining, displacement, and predatory lending policies that specifically excluded Latino and Black neighborhoods from federally backed mortgage programs. For decades, those policies were officially ended decades ago, but the neighborhoods those policies created still exist. The wealth those policies denied is still missing from those communities. History doesn't disappear when a law gets changed. Here is something that should enrage anyone who believes in fair markets. Latino workers are not less productive, less educated, or less hardworking than white workers. The data consistently shows the opposite, but they are dramatically overrepresented in the sectors of the economy that are the least likely to pay well, offer benefits, or build long-term financial security. The Brookings analysis found that a significant share of middle-class Latino workers are in what economists call the lower middle class. Technically within the middle income band, but sitting near the bottom of it. They're in construction, food service, transportation, personal care, and domestic work. They're essential. They're showing up every day, and they're being systematically underpaid relative to their white counterparts doing equivalent work. A Stanford University report quantified this. Black and Latino millennials earn an estimated $2.4 less per HR than white millennials, and between 39% and 49% of that disparity comes not from performance differences, but from occupational segregation. Latino workers being concentrated in lower-paying jobs isn't a coincidence. It is a structural outcome of decades of discrimination in hiring, promotion, and professional network access. And Latina women face a compounded version of this. According to ESLR national data, Latina workers make just 54 cents for every dollar earned by a white man. That is wage gap data that almost never makes it into mainstream financial media. Not 82 cents, not 90 cents, 54 cents. The 20th of November, 25 Pew Research Street, UD found that, as of October 2025, 63% of Hispanics rate their personal financial situation as only fair or poor, in a country where Latinos are projected to make up 28% of the population by 2060, and currently contribute an estimated $4.1 trillion annually to the US economy. That number is an indictment of how the economy distributes its own gains. Now let's layer in geography. Because place matters enormously in this story, Latino families are disproportionately concentrated in the most expensive states in America: California, Texas, Florida, New York, and the Southwest. California alone accounts for a massive share of the US Latino population, and as the Brookings data showed, California metro areas dominate the bottom of the affordability rankings. Los Angeles, San Francisco, Salinas, Santa Barbara, San Luis Obispo. In all of these cities, fewer than half of middle-class households can afford basic necessities. And for Latino families in those cities, the numbers are even worse. So you have a community that earns less on average within the middle-class band, owns fewer in the most expensive housing markets in the country. Every one of those disadvantages compounds the others. The 2025 Hispanic Research Center data found that 20% of Hispanic children live in severely housing cost burdened households spending more than 50% of income on housing, when half your income goes to rent before you even think about food, healthcare, or transportation. You're not building wealth, you're barely surviving, and you're definitely not accumulating the cushion that turns a financial emergency into a temporary setback rather than a catastrophic spiral. Here is the uncomfortable truth about why the racial wealth gap doesn't just close on its own. Over time, generational wealth compounds in one direction: retirement savings, investment accounts for generations. That inheritance, even a modest one, is enormously powerful. A $50,000 inheritance means you can put 20% down on a house and avoid private mortgage insurance. It means you can absorb a job loss without taking on high-interest debt. It means you can start building your own compound returns earlier. The Harvard 2025 data on older Hispanic homeowners exposed exactly where the generational wealth transmission breaks down. Even Latino families who did everything right, worked hard, bought a home, stayed in the labor force, often face a combination of limited retirement income and persistent housing debt in old age, meaning there is very little left to pass down. The wealth doesn't compound across generations the way it does for white families that had earlier access to federal mortgage programs, suburban real estate appreciation, and employer benefits. The Axios April 2026 report quoted Gabriela Carmona, lead author of the UCLA Unidosis study, and her words are worth sitting with. We can be productive members of society, but still face a lot of barriers when it comes to actually being able to be shareholders in wealth. Latino GDP figures, she points out, mask a deeper issue. Latino families are contributing heavily to economic growth, but are largely shut out of asset building opportunities. They are, in her words, burdened by debt rather than building equity. That is a brilliant economy, working against the very people who built it. I'm not going to do the fake. Here is 6 tips to close the racial wealth gap thing, because that would be insulting to the scale of what we've been talking about. The racial wealth gap is not a personal finance problem. It is a structural, policy-driven reality that requires structural, policy-driven solutions. Brookings laid out several of them in their December 2025 report, raising the federal minimum wage above its 2009 level of $7.25 per HR, strengthening collective bargaining rights, expanding universal healthcare and childcare access, and, critically, targeted, place-based interventions in cities where Latino and other minority middle-class families are being priced out of any meaningful financial progress. The UCLA, Unidosis April 2026 report points to 5 specific policy areas that drive the Latino wealth gap: immigration law, housing policy, labor market regulation, access to public benefits, and educational equity. These aren't abstractions. Every one of those policy areas has a direct dollar and cents impact on how much wealth a Latino family can build in their lifetime. But here is what you can actually do on an individual level right now. If you are part of the Latino community, or if you're someone who serves that community financially, the retirement access gap is one area where information and individual action can genuinely move the needle. If your employer does not offer a 401k, you can open an IRA independently. A Roth IRA, if you're in a lower tax bracket, is particularly powerful because your contributions grow and are withdrawn tax-free. Even small, consistent contributions to a Roth IRA compound dramatically over decades. The 2025 State of Hispanic Wealth Report from NAREP found that barriers like limited credit, access, and fear of mistakes are keeping many Latino households out of wealth-building vehicles they're actually eligible for. On the homeownership side, yes, the housing market is brutal in 2025 and 2026. But if you're a first-generation buyer, programs like FHA loans, USDA loans, and state-level first-time homebuyer assistance programs exist specifically to address the credit access barriers that have historically locked Latino buyers out. NAREP's 2025 report is very clear. The system has barriers, but there are also specific tools designed to lower those barriers. The broader point is this: at the individual level, financial literacy and access to the right tools matter, but never confuse individual action with a systemic solution. The 50% vs. 27% gap is not going to close because of better budgeting apps. It is going to close when policy changes make housing affordable, credit fair, retirement universal, and wages equitable. Let me bring this home. The American middle class has always been sold as the great equalizer. Work hard enough, earn enough, and you're in. You're safe, you're stable, you've made it. But what the data is showing us clearly, consistently, across 160 cities in a December 2025 Brookings study, in a brand new April 2026 UCLA report, in Pew Research data from November 2025, is that the middle class is not a level playing field. The income bracket is the same. The cost of living inside that bracket is not. 50% of Latino middle class families cannot afford basic necessities. 27% of white families face the same challenge. That gap, 23 percentage points, represents decades of compounded policy decisions, wealth exclusion, wage suppression, and credit discrimination. It represents home equity that was never built, retirement accounts that were never opened, generational wealth that was never passed down. It also represents 62 million Americans who are contributing $4.1 trillion to this economy every single year and being told, in the most financial way possible, that the economy isn't really working for them. That story deserves to be told louder than it is being told right now. If this video gave you something to think about, something to share, something that changed how you see the middle class label, drop a comment below. Tell me what part landed hardest for you, because I read all of them. And if you want to go deeper on the racial wealth gap, the housing affordability crisis, or how retirement policy is failing working Americans, hit subscribe, because we cover this kind of thing every single week. I'll see you in the next one.